then we'll take off again. No, then we'll take off again. Once we get the charging infrastructure right, and the prices get. We're not. It's only going one way, and eventually there will be autonomous. There's no doubt.
Well, but I think Carl.
But this had to happen with the horseless buggy. At one point, people were like, horses kind of work okay.
Yeah, horses are good.
Well, the future is now.
They can take a corner nicely. Like this.
Well, I'll bet on Rivian here. I think Rivian's got something going. They actually make cars. The car's a little expensive right now. They make trucks, but they have a deal with Amazon, and they are the way that you'll be able to get to. Look, you can get carbon neutral by using Rivian. And I know that CSX is, they're building a plant on CSX line. The CEO of CSX was on the board of Rivian. Rivian's got a terrific showroom in Williamsburg, of which I just hope that I can lock in and do this show from there.
That'd be nice.
Yeah.
Totally.
Jeffries does cut Tesla to 210. They were at 250.
Yeah, I know. It's problematic there, Tesla.
Let's see how Tesla's looking this morning.
To come back quickly to Microsoft, which is
looking top heavy, man. Look like it could come back down to 226. Tesla.
Love people. I mean, again,
Nvidia looking top heavy. Nvidia could get under 490.
In other words, you need to have at least
Apple still sideways. Meta.
And
Meta could come back
year,
down to 329.
But this thing could be one of the biggest product rollouts.
Massive gap up on Microsoft and then fully unwind.
That is the hope of those who own stock.
AMD.
It so far has proven to be a force multiplier for those who use it, as opposed to a way to be able to fire people.
Right.
Force multiplier. That's my term, but I really like it.
No, I like that. Yeah, that makes sense. In other words, a huge productivity tool, but not right. You just can do more.
Right, well,
we don't have to get rid of you. You're just going to be a lot more productive.
I keep hearing, like, people want to do presentations, and it can do presentations for you that are flawless. I continue to think that for our lives, if I want a summary of a company of what Illinois Toolworks is doing, it's easier to do ChatGPT than go through them. I'm also more useless because anyone can do that.
Well, you look great today. So regardless,
this is a new one. This is a new suit.
The two of you are putting me to shame. I gotta up my game.
Wow.
I like the lighter color.
But when I look at the people who work at AI, I look at Travis, just Grandpa Jim.
I can't get over this. We'll come back to it, obviously.
What, you mean the letter that's signed by the people who fired him?
Yes, it's signed by the guy who intentionally started the whole problem.
If we worked at a company like this, it'd be like Dunder Mifflin. Right? You'd be in the Allentown.
He literally signed a letter saying I should be fired.
Yeah, right?
Yeah.
He's in the what branch is he in?
He's the chief scientist.
I think he's in the Camden branch.
But where's the main office?
I don't. Not in Allentown. Where's it? No, it's in Scranton.
It's in Scranton.
People who did this to the company, they have to go. They gotta go.
No, it's just a farce. I went to Saturday Night Live on. I think they should have done a segment on that rather than what they did it on.
Take a look at the pre-market here. Plenty of news to get to. Yelling on Squawk today. We'll do Disney, City, Uber. So got some calls.
We have so much to talk about.
And Penn and KBH. We'll get you set up for NVIDIA as well as futures. Go green.
Yes. Oh no, you're not late, bro. You're not late. Right now I am in a short on NASDAQ, and I'm also on a short on ES. I'm looking to add to ES. My target, as you can see here on the 1 hour time frame, are the red lines. So my first target on ES short is going to be 45.04. Second target is going to be 44.96. Currently in profits on the NASDAQ short, and I'm slightly down. I'm like a point and a half down on the ES short. Also scaled in short GBP USD and Euro USD. Moving my stop loss to break even on NASDAQ. I'm in profits on ES. Is USD JPY a short? I don't believe so. USD JPY. I don't think USD JPY is a short because if if Euro USD and GBP USD are going down and the market is dropping, USD JPY is going to go up. That means that the dollar is strong today. So if the dollar is strong today and the market's coming down and EU and GU are both coming down, then USD JPY would be a long. And looking at this 1 hour time frame, damn, look at that, huh? Probably could have shorted this a few days ago. What is this? Today is Monday, Friday, Thursday, Wednesday, Tuesday. So last Tuesday. Wow. So yeah, so USD JPY, in my opinion, looking at the 1 hour chart, would be a long, possibly up to 149,200. And 149,200 is going to be a resistance area. So right now you'd be looking at about, what's that? You'd be looking at about 60 pips. So 60 pips to the upside is the equivalent of a stock moving 60 cents. So if you were to do a standard lot, and again, this may vary depending on the broker you use, but most Forex brokerages are pretty universal when it comes to Forex pairs. So a 60 pip movement, which again is the equivalence of a stock moving 60 cents, right? So if you do a standard lot, a standard lot every 10 pips, which a 10 pip movement is the equivalence of a 10-cent movement, all right? So that 10 pip movement on a standard lot is going to pay you out $100. So that would be the equivalence of you doing 1,000 share on, let's say, I don't know, ABCD stock at $1. That stock moves 10 cents, right? You're gonna make $100 because you did 1,000 share position. So a standard lot on the Forex side is going to pay you $100 for every 10 pip movement. So if you take a long here and we're looking at a possible 60 cent, 60 pip movement, you stand to make about $600 if you take a standard lot, 1,200 if you take two standard lots, which either you do two singles or you do 1-2 lot position, which would be 2.00, which is the equivalence of you doing a 2,000 share position on a 5 or 2 or $1 stock. Thank you. You're very welcome. Where your stop loss on ES? My stop loss on ES is at the high of day, so I'm risking about 5 points from my entry. So my entry is 45.2950. I'm risking to 49.3450 because I'm targeting almost 30 points to the downside. So it's a really good risk to reward ratio. I'm risking literally 5 points to make almost 30 points. So I'm risking about $250 on one contract to make almost 1,500. Now it may take its sweet time to get there. I will move my stop loss to break even or to in profits once it breaks below 45.25. If we struggle to break 45.20, I'm just gonna take my profits and probably look to enter it later in the day. It's a holiday week, so we might have some back and forth. We might have some, low volume paint drying type of day. So take what you can when you can take it. Looking good. Be looking good. Dow ain't looking too bad herself either. Think I might hit the Dow or something. Okay, taking a short on the Dow. I'm gonna risk yeah.
Black Friday. All right, let's get to a mad dash with
Yeah,
Jim.
so I'm gonna risk to the high of the day on the Dow, and I'll be targeting sub last week's low, so last Friday's low.
We got a lot of revenues and no cash flow. This is not helping.
Well, I mean, look, there's $21 billion. Now, David, you remember this acquisition. I feel like the people have to focus on the state of Missouri, which is a very pro-tort bar situation.
All right, we are in profits on ES. Let's go.
500 million each of punitive damages for these plaintiffs. David, you've got a collapse of a big truck.
What you're referring to, which is the continued litigation over the Monsanto product. And then we've also got, basically, they were told to stop a trial, a direct oral therapy for patients with atrial fibrillation or risk for stroke, which is stopped early because it's not working.
Risk for stroke is pretty much everybody. So it was something that Bristol Myers has similar product. Bristol Myers is going down very big. David, I think that you have to talk, put this in the confines that you and I both know. This is one of the major companies in your
Hopping in them shorts with me, or are you sidelining it?
There's a couple of big companies here, BASF, and what happens is that
Longing Nas again? Okay. Ooh. Well, I do have a sell limit just above.
Enormous and continue. And then back to just the unfortunate, disappointing results from this trial, which, as you point out, is also impacting Bristol Myers. They have something as well. They're very sitting on,
and that was going to be their bridge. They had infection, and infection was going to be the bridge of the Eloquist Cliff, which is you see that advertised all the time. You have blood, but there and David is supposed to be $2.5
So yeah, I have a sell limit at like 15,920 if it can get there. It's a big if. She foul, baby, foul. Foul for that. All right, 3 points away from moving ES into break even for a stop loss.
It's exaggerated. So the two pieces of information per buyer are just disastrous.
That's just gonzo. Gone.
We'll keep following both, of course, and this continued decline in shares of both bears to see that Bristol Myers getting hit as well. Opening bell about a little less
Let me throw
5 minutes
on.
away. Don't forget, you can catch us anytime and
Throw
anywhere
on a
by
quick
listening
tune real quick, you know what I'm saying? Get y'all ready.
Opening Bell podcast. We're right back.
Get y'all ready for this.
Next one to see you lose. Homicide on another case. Mouth wide, gold teeth with a pale face. My niggas can't read, had impediments, but they never would leave any evidence. Your mother still in pain, have been a few days, but you know they always came for minimum wage.
Slide on the pimp gang with my pinky ring. Lot of gang, lot of bitches in the icy chain. Why you claim that you rich, that's a false claim. I be straight to the whip, no package claim. Whole lot of styles, can't even pronounce the name. You ain't got no style, see you on my Instagram. I be rocking it like it's fresh out the pan. Only when I'm taking pics, I'm the middleman. Walk talking like a boss, I just lift a hand. 3 million cash, call me Rain Man. Money like a shower, that's my Ray Ban. And we all in black, like it's gangland. Say the wrong words, you be hangman. Why me stick to your bitch like it's spray tan? Mr. What kind of car you in? In the city, tell my name, nigga, I ain't gotta say it. She can get a taste. She can get a taste. Fuck what a nigga say. Saw the stain like Mary Kate.
She gone, bro. Get ready for it. Think we sliding right from the open. Let's go. Up 2 points on ES short. 2.5 almost. Yes, I'm short. I'm short ES at 45.2950. Let's go. And I'm also short NASDAQ. I'm looking to re-add to NASDAQ short at 15.920. Don't know if I'm gonna get it. Ooh, let's go. Oh, let's go. Up over 3 points on ES. I need ES to break 45.25 for me to move my stop loss to break even. Let's go. I'm gonna take some partials on the Dow Jones short. Let's go. Beautiful, beautiful, beautiful. Let's go, baby. Go, 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 go. Do your thing. Slide for me. Woo. So my targets on my shorts for ES. First target is 45.05. Second target is 45.96 area. So you can see it right here on the 1 hour time frame. If I was to zoom out to a 30-minute time frame, you could see target 1, target 2. All right. So if you guys wondering am I short bias, that should answer that question for you. Let's go. Oh, let's go. Go, yes. Go, baby. Go, go, go. Yes. Yes, yes. Up 5 points and counting. Woo. We're going to hit a 26. I'm going to add. Oh, yeah. Damn. The disrespect. The disrespect. Ooh. I told you I got a sell limit at 59.25. I mean 59.20. I don't know if you're gonna get it. Added to ES at 45.26. Think so? Oh, wow. Damn.
the challenges are.
I was right on taking profits on Nas. On Dow. Shit. Nasdaq short is filled. Oof. That's, wow.
If you look at what's done in a year or something, man.
Okay.
I think the challenges are even deeper than Iger had realized. You made that very clear during our interview back in July.
They're
making
making
so many of those things.
Do you think they're making too many movies, man? They were just making too much stuff.
Well, he said that as well. Yeah. And he's talked about the quality decline, and certainly the box office for this last Marvel movie is a reflection of what may be less than great success.
You know what may be less than something at Disney? They had already cut back big on Twitter.
I mean, advertisement.
Yes, before any of this practice, and I think we should spend a few minutes on another disintegration.
Okay.
The X, letter X. X is not marking any spot from what I can tell. And I've got to tell you that I searched for a positive headline. Maybe David may know the new person who might be helping out in the politically.
On the what?
Political.
Linda's son.
Linda's son. Well, you got to find someone, right? Hey, you know what? My daughters would be fractious and unruly. They wouldn't work for it.
I would only, obviously, we all know X is not a public company, and so.
So it's
for our
harder. So what's it?
viewership, you end up looking at Tesla as a reflection somehow of the morass that Musk may find himself in some way.
Well, when you think about the choice, I mean,
somewhat unfortunate.
and David, what do you think about the ads that are disappearing?
There seem to be a lot. You know, in all seriousness, you've got, we've mentioned this many times, it's one of the largest leveraged buyouts of all time.
I would like that.
Obviously, probably at twice what the company was worth at the time it was completed.
Right.
Much to the chagrin of Mr. Musk, who truly thought for some period of time he could get out of the deal by just paying the break fee of $1 billion.
Run you out and then
banks have
flip.
financed $13 billion of that. Bets are sitting on it, or $12.5 billion.
Let's
Going,
see.
no, this doesn't help. This doesn't help.
How about it? You know, I remember when I started this stream, and programmatic came. You know, our ad revenues went from like 20 million to 7 million, and I would call the advertisers, and they would say, "Well, you know, we didn't
Definitely
notice."
feel like this could be a run stop, but let's see.
You said this over the weekend. And it's like, wait a second. No. You know, I mean, it is like a little bit like that, you know.
Your point over the weekend was that some of these companies that have paused are going to realize they didn't lose anything.
No, they didn't lose anything. That's kind of what happens in advertising when you have a gigantic blitz on advertising and one of them doesn't hit.
Just sluggish.
Right,
Sluggish.
but if one of them doesn't hit, and it's because this kind of stuff that's going on. Well, David, I
Jeez,
think
man,
that you
still
say
pushing.
I'd rather be in Microsoft, even though X is not a public company.
Yes, I think you might be, certainly after the what occurred on Friday, where there was a lot of concerns. Late in the day, I was getting some
So
calls
now it's
people
making
saying,
new
"Oh,
highs.
this
Could
is
this be off of this whole Microsoft and AI news?
They've made. They own 49%. It's such a key part of their strategy. And now you reverse that today. Sam Altman and Greg Brockman work for Microsoft now.
Although Wells has an interesting
And
take
many
on it.
other employees too.
Wells says if you're doing something as mission critical as this build out, maybe if you're Meta, Google, Amazon, you can convince a customer you can't rely on just one shop. You're going to need us as a secondary
Well,
partner.
I think that one of the things that is so interesting about the announcement that we got just today, well, this was a week ago they announced this, but when you talk about what is going on at NVIDIA, you're talking about the Spectrum X product, and you can get it with a whole bunch of different companies. That's like, you know, see, one of the things that is really interesting about NVIDIA is that you go to any provider, like you go to Dell. You go to Michael Dell and NVIDIA, they've got a working relationship. You go to Hewlett Packard Enterprise, and they got a working relationship. You can get the NVIDIA's product from a lot of different people, but they will then help you, and they also have a software layer. And it's like a week later, I'm just trying to figure out what they will talk about tomorrow night. It's exciting because I think the expectations down are high. I'm going to try to hit something else besides the revenues.
We're also
Not
going
much
to
of
get
a
tomorrow.
pull, but
We're gonna
yeah.
have so many things in Lowe's, Best Buy, Kohl's, Urban, Burl. Boss, pretty nice look at the holiday spend. Says apparel footwear inflation's coming back into a 5-year trend. It's the coldest winter in about 5 years.
All matters. By the way, if you take a look, last week, maybe the most fundamental, tech story was how Gap stores had a 1% increase in Banana Republic, and you got a 30% increase in the stock. Macy's is now up from 10 to 14. Would it shock you if Tom Kingsbury is able to build some sort of turnaround at Kohl's, since he used to be at Burlington? He did such a great job. I mean, maybe that happens.
It feels like it, but the trend continues of companies that are doing really not well.
That's my point. I mean, if you do a 1% comp and your stock goes 30%, what if you did 2? This is up 60%. I mean, Macy's needs cold weather. They need
That's a
cold weather.
$2.7 billion market value.
Oh, here we go.
Oh, here
we go. Some
Oh
market
my
cap.
God! It's about percentage
it's-
gain of the stock.
Put it in some perspective. I mean, Apple is it 1,000 or 10,000 times bigger? I forget. I mean, I
But,
gotta
you know, but
zeros get
Ant was as big as Apple, and where's Ant? It was 80 billion before it disappeared.
You were looking at Ant because you were trying to understand the ability to eviscerate value as quickly that is taking place in
Well,
open.
I was trying to figure out President Xi versus the
And
board
you
of
looked at, you were thinking back, which was smart, Jim,
Did
to
Jack-
Jack Ma and comments he made. It's what, 4 years ago, maybe or
Yeah.
so,
Right.
that ran afoul of Xi, and they basically shut down the ability to take Ant, this huge financial services company, public, which, by the way, never made it to the public.
No, never did. But don't you think it's interesting that you're comparing a communist dictator, not dictator, sorry, I didn't mean that, a communist leader to the board, which is now disintegrating, of a company that was worth $80 billion.
Yes.
What is that?
I'm not making that comparison at all. You did.
I was, because it was glib and facetious.
Yes, it was. But the one thing it sort of does connect on is getting rid of that much value that quickly. I don't know what OpenAI is worth. Again, we're talking about a private company here, but that's okay. too.
We talked about letter M's.
Yo, they sure did. Like, what the hell?
We're doing one private
You
companies.
know, we don't have a chart to show you, but if OpenAI, we did have a chart, this is what it would look like. Thursday, Monday, or maybe Friday. Monday, yeah.
You trace
We like
that. Are you tracing it at Head and Shoulders
Like
or
that.
reverse Head and
No,
Shoulders?
it's just, what do you call that?
Oh, that's it. It calls it use decline.
Yeah, you just,
Use decline.
I'd
In
be
the
sitting here
meantime,
on my market cap watching and saying, that's a lot, that's a lot.
in the meantime, we got some real love for Salesforce today. Cash Rangan loves the quarter coming up, and Salesforce has been the laggard, to quote our friend Will Frost. Congratulations, baby, there. And it's just a very exciting time talking about durability and profitability. But most importantly, this is about to take out the level it had the upside
Son of a
surprise,
push.
and then it got thrown back. Just thrown back. And maybe that's going to change. The forces might change. And it could blow through.
What forces would they be that change?
Well, there were a lot of people who felt that was so-called last good quarter. And if it's not the last good quarter, it would be really terrific. You know, there were a lot of last good quarters yesterday, like the Chargers was the last good quarter.
Oh, man. 5 games decided by less than 3 points.
You know, I said to my wife that her person matinee idol, just you date yourself. There's no matinees and there's no idols anymore. I said, all right, he's on Twitter or something. I don't know. What do you say? What do you say? Grandpa Jim. I got the Grandpa Jim a lot. So, you know, matinee idol. I slipped the guy a 5 to get a new restaurant. Suggested a new place to go. What is this? A 5? You slip a guy a 20. I said, I didn't want to go to the restaurant. I mean, he gave me bad information. I gave him bad money.
They sure
The
did.
world has passed me by.
Chris, you're old.
I was on the F train this weekend. I was cosplaying.
You were on the F train
Doing
this
some
weekend.
cosplay.
Cosplay.
Was this on your way to bowling? What was this?
No, I saw cosplay and it was coming back from Saturday
Took out the
Night Live.
highs. Let's see where this
Cosplay.
15-minute
Everybody
candle
else on the train
closes.
Cosplay. Look at Google it. Jeez. Oh my God.
By the way, I'm old too.
A nice wick would be solid.
Listen to them. They love that. There's so much we didn't even get to. I still want to go back to GM for a second. The only reason I want to go back to GM is because I think that Tesla, there's a note today about Tesla and Bernstein, sluggish growth, that this whole concept of what's going to have to take off is making that group to be the worst group I've seen in a long time. The auto and auto related. And I did a piece this weekend for my Justin for the investing club. Just these groups that have just been a black hole. I mean, drugs, autos, banks. David, banks. Huntington Bank shares. Key Bank.
Yes.
These are valued at the same price they were valued during the crisis. How's this happen?
Crisis being
The banking crisis. I'm just
the,
looking at
which one?
Well, it's
The most recent one or the global financial
I'm
crisis?
just saying, I'm looking at stock and companies that, everyone looks at the Magnificent Seven. So I decided to dive into the non-magnificent 493, and they are frightening in how much they've done.
Nice little clean point pullback so far on NQ.
It was about how diversification is just not.
It could be going for 1600 again. I mean 16,000 again.
It's been so big.
What's XMAG 7 for the year? We're up 60 basis points, something like that.
It's just such a bad year.
Well, what do you do, Jim? Do you really just focus yourself on mega cap growth and that's it?
But when I go away from mega cap growth, I'm ridiculed for talking about a company that's 10 billion. So yes, I was going to tell you about Sherwin-Williams being upgraded. Jim, it's like
That tiny dog.
yeah, it's like
Touchdown.
Jim,
Check
like
mark.
Jim, like please. I mean, Dutch Bro.
Right.
The fact that Dutch
Money to
Bros.
be made in a $2.5 billion
How about
market
Arm?
cap
Is that big
company.
enough?
I
Wells
get
in
it.
New Norway.
You're right. You're right. I understand.
Is that big? How about KBH Homes? You want to talk about that, or is that just too small?
I don't know. My point, but 7 stocks represent 29% of the S&P.
Well, look, along with the 10-year, I will now do a program about 7 stocks.
By the way, that would get some ratings.
Just call it the
You're
Magnificent
gonna-
Seven. We know the theme music.
Yeah.
Oh, geez, I want
That's actually a good idea. Maybe for the 11, that's what you want to. Carl.
Same.
There. We're just going to talk about 7 stocks. That's it.
I
Not 8.
had more reaction by mentioning that someone did not live who did live in Magnificent Seven. More reaction than any story I've ever done. So yes, Magnificent Seven it is.
Thank you. Okay, good. All right, let's talk about which one you guys.
Yeah, it was.
We have Black Friday coming up, and get this. Let's see if David understands this. Do you know where the game? You know what the game is on? What network? Yeah.
It's on Amazon, but it's NBC actually is distributing it. I believe, or behind the scenes
It's going
producing
to
it.
Prime.
It's on Prime. Yeah,
That's
just
what I'm saying. That it's another
It's the
great
3
thing that
o'clock
Amazon's
game.
doing.
with the great New York Jets team taking the field against Miami.
Is your son
That is-
quarterbacking?
that
Because
is
they're
good.
looking for a quarterback.
Yeah,
That was a
wide
chip,
receiver,
that was
and
the
you
ugliest.
never know at this point.
I felt
you
so
know?
bad. It was such a run for your life situation. I felt so bad for the guy. Quarterback. Who's no longer quarterback.
Zach Wilson.
He's out.
Be kind.
Yeah, he's out. He's like he's with he's with AI. He's with AI. He's out.
It's been a very hard season, but you know, as a New York sports fan, you've got to get accustomed to
But
it.
I'm focused on Disney ratings. I'm focused on, by the way, the initial for ESPN, very good.
Yeah, we didn't mention the Penn call out of, is it B of A?
Yeah,
Yeah, up to buy, they go to 30.
it's very big.
They
Now,
think
the one thing I would say is, they do have these bonuses where you can sign up. I mean, that's how I got involved with
Although
DraftKings.
part of the call here is discipline on promotion.
I know, and that's
They think the ESPN optionality is worth maybe $8.
well, to me, the greatness about these, I don't know if you ever do get, but it's like they're very addictive. I didn't want to tell you that, but they are. You find yourself, there isn't anything. Now we have Friday we're going to bet on. We'll wreck Thanksgiving by betting. Now we can suddenly wreck Black Friday by betting. Only Saturday's spare, unless you bet college, which I put in.
College football on Saturday night. It's on every network. It's college football.
Why
That's all
not?
there is.
College football's very exciting. We have like 4 number 1 teams. Company, perfect. Right? Hey, David, there's something we can talk about along with Magnificent Seven, Ohio State, Michigan. I mean, those are also big.
And name, image, likeness. That's actually been a real positive. for a lot of
Yes, Florida
players.
State, that
How much
quarterback
money
went
they're-
down.
how much money they're getting.
In the
Be
meantime,
patient.
David, Baba cut numbers, price target Baird. Is that big enough or is that not big?
It's big. It's big. Baba had a very bad week last week, as you know, after earnings. And the decision not to spend cloud.
Okay,
was
here
citing
we
in
go.
part
Oh, we
the
pulling.
inability to get enough chips, perhaps, to do what they
NVIDIA,
need to do
it's
to
an
power
NVIDIA
the-
Would
chip
love to
thing.
see this whole
NVIDIA's
15-minute candle
stock
undone.
A couple of retailers that I'm looking at that could be very big. Yeah,
Hey.
I think Dick's could be very big.
Hey, Jim,
I
I
think
got
Best Buy.
I got one for
Best
you.
Buy could go there. I think Best Buy could be
Jim,
very big.
speaking of Baba in China, you hearing anything on VMware today, Jim?
It's very short.
How about this piece in the FT?
Dan sat next to the foreign minister or something at that dinner. Nothing came of that.
I don't know. I thought that proximity would be good, but it didn't seem to matter.
This piece in the FT saying the China share of global GDP is falling faster than when Mao was in power.
What?
Yeah.
Now it's tough for the companies there.
Wow.
Not a lot of earnings per share. But they let flowers move down a lot of 5-year plans, but not a lot of stock exchange.
And I know we don't talk about Argentina very much, but this new
They elected an anarchist. First anarchist been elected in a long time.
wants to take them to the dollar.
Well, how about he had to listen to the central banks? What he thought us
By
out
the
the
way,
way.
talk about inflation, 140% inflation. I mean, their economy is completely collapsed.
I think that
Argentina, it's not good at all.
we've seen some worse inflation.
Where?
Weimar.
Oh yes, but it's not.
Although, Jim, here, gas prices, Thanksgiving, food prices will be down 4 year on year. I don't know if you saw German PPI down 11.
No, I mean this is made. Well, that's really deflationary, which of course led to some bad things in Europe. No, I think that things are going Pal's way, but the turkey was still more expensive. We got the turkey, and turkey seemed like it that you got to go buy Tyson Foods, maybe poultry.
You mentioned the problems in autonomous. Uber's looking past all of that and this convert.
And raises money. Look, the convert that Rivian did, people shot against Rivian Common. They're not shooting against Uber Common. It's a small deal. Look at that.
That's a new
actually
52 again.
that's one of my absolute favorite stocks. You could not get an Uber to save your life after Saturday Night Live.
You mentioned Saturday Night Live about 10 times. Did you enjoy your time at Saturday Night Live?
It was okay.
Good show.
Look, I've got pictures of me on the subway coming back from the F train.
Okay.
What, dressed as Momoa? What?
Man of the people.
You look. Yeah.
Miserable.
Yeah, you don't look happy.
David, the F train, there's nothing like it. That's what I have to say.
That's for sure.
It's the only way to travel, as I say.
The F train, it's a rocket.
The only way to go,
It's a
man.
rocket.
Up, down, down.
All right, we're putting the subway in and Saturday Night Live and also NFL, all in that other show that David wants me to do. The alternate show.
7 stops.
Versus David, did you see that
It's as good a name
Snowflake?
as any we come
Snowflake
up
early
Call the show the Magnificent Seven.
David, what about North Coast saying taking Wingstop by the
That's
Do you
right.
care?
Yep.
The Wingstop sandwich is great. DraftKings 38 to 47. Great investor day BTIG. Come on, let's focus.
So we talk about 7.
Quick reminder, you can always catch us. Actually, you can always sign up for the CNBC Investing Club with Jim.
Hey, Black Friday
500
deal.
plus stocks.
Yeah, Black Friday be a deal. You got to go there. And
7-minute ads. You can't have 6-minute ads. You can only have 7. Just no.
So go to cnbc.com/join the club or use that QR code on your screen. Takes you right there. As for Fed speak, not a lot today. We will get LEI at the top of the hour. The curve is split. Short end's a little bit lower, but the 10-year is still above 4.5. Back in a
Mike.
Copy that. Damn, EU. Alright. There's some serious funny business going on right now. He sure is. Oof.
Despite the soap opera regarding OpenAI, which really began Friday afternoon, 377 Microsoft is a new all-time high. We're going to watch that as the street tries to wrestle with whether or not the technology is entering a new chapter. That's definitely helping out the Dow. Dow's up almost 34 points, and we're hanging on to 45.23. Back in a moment.
Yep, that's what it was looking like. Yeah, and like meanwhile, Dow Jones ain't really doing anything. It's literally all Nas. Nice rejection. Yes, come on. She breaks down and we're good.
Stop trading.
You know, last week, Kesha ordered Palo Alto that I thought was very good, and you had to believe that the new way to look at it always went the best way. You want to look at what's CPRO, right? You want to look at the performing what's left, remaining performing obligations. Now the stock is taking out where it was when it had the so-called order, which reminds people at home, please don't go out of a good quality company if initially it doesn't do well. The stock doesn't do well because the cash flow has got a hold on here. I think this is a sensational stock.
You were not unnerved by the BVA downgrade on Friday.
No, I never got close. You downgrade. If you downgrade the cash flow, why don't you send me an invitation for your funeral? Come on, let's go.
You like that? Yeah. He's slaying you. Yeah, you're right.
No, that's of course Jacob and Big Fisk. American Rascal, one of the greatest books ever. No one ever talks about it.
Well, you
No,
do.
I do. My mother was a saint, but whenever I read a book, who said that?
I don't know.
Nixon.
Jim, what about tonight?
Okay, I think it's time for a little levity, but also find out what's really going to go higher in the next 6 weeks. I've got O's, the mentalist.
Very
And
nice.
believe me, O's knows.
He knows.
He knows.
Only 7 stocks he can talk about, though.
O's can talk about a lot of different things.
Let
It's
it-
going to shock you.
I have a number in my mind, 1 and 7. That's
And
all
once
you can do.
And why don't you say it to me so I know it?
Right.
We had that at the Baby's Heart Fund. Someone said, he said, okay, I want you to think of somebody famous. And the person said, oh, okay, Hillary Clinton. He just, no, that's my job. You never know. You never know.
Jim, we'll see you tonight.
Absolutely. Did I tell you I went to Saturday?
It's good, right?
Right.
Yeah.
Matt Money, 6 p.m. Eastern. When we return, more on the shakeup at OpenAI in just a minute.
Yep, the Dow is definitely the weakest, so they could be trying to run the highs and then drop it.
Walk on the street. I'm Carl Quintanilla with David Faber, Michael Santoli at Post 9 of the New York Stock Exchange. Sarah Eisen has the morning off. A lot of news regarding tech over the weekend, but the shares of tech companies, at least the big ones, are powering forward. In fact, the NDX, Mike, taking out the July highs. We'll watch that today.
Exactly. It's ahead of all the other indexes. S&P up about 0.25%. We are 30 minutes into the trading session. Here are 3 big movers we're watching. Shares of Bayer hitting their lowest level in a decade after the company halted a late-stage trial for a blood thinner drug for heart disease. The company said its experimental drug was shown to be inferior to competing drugs from Pfizer and Bristol-Myers Squibb. Separately, the company was ordered to pay $1.5 billion in the latest U.S. lawsuit over its weed killer Roundup. Those shares down almost 19%. A number of firms reiterating their bullish calls on NVIDIA ahead of the print tomorrow. Raymond James and KeyBank writing that they expect a solid beat and positive commentary.
stock up 240% this year, tacking on 0.5%. And Penn Entertainment headed higher. Bank of America upgrading the name to buy and raising the price target to $30 a share, thanks to what they call a massive sports betting opportunity. Stock up almost 6%, though a big underperformer versus DraftKings this year.
Leading economic indicators out just moments ago. Let's get to Rick Santelli for that. Rick.
Yes, David. This is the 19th consecutive negative month-over-month change in leading economic indicators. Down 0.8%, a little worse than expected. As I said, 19 in a row. To find a longer streak, you have to go into the Wayback Machine. April of 07 to March of 09. This particular number is equal to our April read, which was down 0.8. You have to go back to March. The previous month, when it was minus 1.2, to find a larger one, and that minus 1.2 was the weakest, going all the way back to April of 2020. We do have a 20-year auction today at 1 o'clock Eastern, 16.16 billion, and Japanese currency, the yuan, both onshore and offshore, hovering at 3.5-month highs against the dollar post that big meeting with Xi and Biden. Carl, Mike, David.
Thanks. I don't know how you keep them straight every hour, but thank you, Rick Santelli. Dow and the S&P are coming off the longest weekly win streak since July. NASDAQ's longest since June, as investors look ahead to this short holiday week of trading. Mike has a new piece about the NASDAQ over the last couple of years, and we did just mention the NDX getting back above this level from July. Yes, and so we're correctly talking about how it has dominated the market. The handful of stocks that lead the NASDAQ 100 have been most of the net gain for the S&P this year. But the 2-year anniversary of the all-time peak was yesterday, and the NDX is still down over that period of time, just slightly. You see, down a little under 4%. And compare it to the equal-weighted S&P 500, as everybody is doing. Over a 2-year span, it's not that much of a divergence. Last year, the downside was led by the mega-cap tech stocks that had that valuation premium in there. Of course, Fed hiking rates, all the rest of it. Along the way, what I think is interesting is what we may have learned about it. One, it's not a monolithic move. It just runs on kind of speculation and momentum because, you know, Tesla's down 40% over 2 years. Amazon is still down 20%. And you have NVIDIA up 50, Apple up 20. So AI is part of that story, but also balance sheet strength, being able to grow in a tough macro environment. The top
So
six
last
stocks in
week's
NASDAQ
highs have
right now
been
projected to be providing more than a quarter of the
the
10%
same. So right now it's at a
earnings
double
growth
top because last
if the
week's high
numbers come
was
in as expected. So it
45,
shows you that it is also chasing fundamentals.
41.50.
There's nothing uniquely rate sensitive about this group, as we now know, because they've been performing with yields going higher. I think you kind of net out and say valuation is moderated in those stocks. You'd really love to see a broader list of stocks participating to the upside for a firmer rally and for a better macro message. But so far, the index has been kind of insulated by these extraordinary performers, and it's not for non-fundamental reasons, I guess I would say.
Yeah, I mean, we're in a period now where we're getting a lot of 24 playbooks, and whether it's Costin or Adam Parker, I mean, the playbook is to still overweight some of these names.
Right. So, you know, I guess part of that is you just don't want to fight the index. There's a lot of hazard if you're trying to outperform being underweight these stocks. But also, as I say, the clarity of the earnings trajectory. The NASDAQ 100 now trades under 25 times earnings. That's not cheap by any stretch, but it's about the 5-year average. Its premium to the S&P is about the 5-year average. It was at 30 times at the peak. And we should remember last year, you know, Alphabet had a down year in earnings. Amazon had a tough year in earnings. So it wasn't just about the valuations getting squeezed.
So what are we looking at next year then? I guess I'm just trying to draw some sort of sense of a trend here in terms of what you're telling
One,
me.
it's really rare to have a 2-year drawdown in the NASDAQ 100. Historically, it's happened 2 times in the last 30 years. And that was obviously the tech crash in the early 2000s and the global financial crisis. So big picture, the direction of mean reversion is going to help you. That being said, if we just stay flat right here and we just go to next October, the 2-year trend is going to look pretty good because just time is going to help us out. I think the issue is when we complain about the extreme narrowness of the market, you're kind of saying, what's wrong with this market? Money's flowing to the highest quality companies with the clearest earnings outlook. And it really is just an outgrowth of the rest of the market not being able to get out of its own way because of what's going on with rates. So if we have peak Fed, peak inflation, peak yields, oil's not a problem anymore. It's a matter of seeing what the rest of the market can deliver to maybe balance things out a little bit. And I do think that's still an open question. I do still think we're going to have late cycle psychology. We're going to be waiting for the downturn.
New highs on
even if we can't
ES.
see it right ahead. Interesting. Yardeni over the weekend said still bullish. We think we may consolidate here for the next few days before this rally resumes, but still 4,600 by year end. They say a break above 45.50 could signal good things for at least the early part of next year.
Yeah, the other way to frame that is, 45.50 looks like it should be some kind of resistance. We might be getting to a high friction area in this market. We haven't traded above this level much at all this year, really for just a few weeks. So 4,600 is 2% higher from
Yes,
here.
I am.
The
I am
record
anticipating a
around
drop.
48.
We've taken out last week's high and we've created a new high. Last week's high was 45, 41, 41.50. So we just took that out by an additional point. So I'm just watching for this buying to slow down for me to add to bring my cost average up and then just write it down.
Let's turn to the boardroom drama that sent shockwaves through the tech world over the weekend.
NASDAQ tested 16,000 and it's already pulling back.
Firing CEO Sam Altman on Friday. And we're hearing today he has a new gig with Microsoft as shares of that name.
Dow Jones is still the weaker one.
Steve Kovac has covered this since the beginning on Friday and joins us as well. And Deirdre Bosa in San Francisco.
The only way TOS will liquidate your position is if you no longer have the margin available to hold set position. So like, let's say if I was in, 30 contracts and this thing went against me 30 points, it would get, once it got to a point where I no longer had enough money in the account to sustain the margin requirement along with the losses that I'm in, then that's when they liquidate you. But I am way far from that. I mean, I'm like, I don't know, maybe 1,000 points on ES away from ever getting liquidated. So yeah, so that's not something to worry about.
No confirmation from Microsoft on that, by the way. But over the weekend, Microsoft, which owns a big stake in OpenAI, failed to convince the board to reinstate all.
Yeah, like I could literally afford this to go to like 55. Was it yeah, like 55, 42.
Instead, Microsoft hired Altman and put him in charge of a new group.
And as you can see, I'm only in one contract, so I'm risking some of the profits that I made this morning. So I could literally probably risk this to go against me another 20 points.
Including CTO Mira Murati, who was
But I do believe we're gonna end up coming back. So at least we'll see what it does when it pulls back down to 45.30s. But I do believe if it gets back underneath that, we'll see a nice slide down to sub 45.20.
Maybe 700 employees at the total company.
Yeah, it's just a shocking series of events, Steve.
Yeah, and it's only one position. I mean, like on average, like I'm used to seeing 15, 20, 25K in drawdown. So having a drawdown of less than 1,000, I mean, I could literally go to sleep and wake up and say, okay, do I need to add or do I need to just continue to hold?
But Microsoft specifically, Steve, since you cover the company closely, they continue to have access
Oh
to
yeah,
all
we're about
the
to
IP,
pull.
right? At
We're about to
OpenAI,
pull.
weights and everything else in terms of developing the large language models. Do we have a sense as to what they're going to use from there and what the new effort is going to actually involve from Altman and his team?
Yeah, it's still early. I mean, they just announced this, 7 hours ago or something. So it's still, but what we do know is the relationship between these two companies. All
Good
those
short.
products we see Microsoft put out, David, Copilot, for example, that's the big one. That's the one they're actually going to start selling, thought to be a huge revenue driver for them. That's all based on OpenAI technology, and you got to imagine anything that Microsoft might have on its product roadmap coming in 2024 would also be reliant on OpenAI. So if they suddenly lose hundreds of employees, that's going to hurt their ability to develop, at least in the near term. Now, if they can bring all those people in and work out their own language models without stepping on, OpenAI IP or anything like that, sure, maybe that can work in the longer term. But the near term, the line out of Microsoft is, we're dedicated to the partnership and relationship That we have now, and that's going to continue. The question is, how long is it going to continue? We also know this contract between the two companies is kind of wonky, giving Microsoft the option, just kind of stop investing and stop working with OpenAI if certain milestones aren't achieved, perhaps. So if that, who knows when that out is going to come up too, and whether or not Microsoft accepts it. David.
Right. We'll talk to Deirdre in a minute about the implosion at OpenAI itself. But you bring up an interesting point, which is
Now the Dow is
they're
catching
developing
up.
their own IP, but how do you could imagine a lot of lawsuits potentially in the future, given Altman suddenly switching sides. What's his? What's the team's? What does Microsoft own versus what OpenAI owns? Which, as you point out, Copilot is still reliant on.
Yeah, and then the questions also around just the talent drain that could happen. What kind of NDAs do these people have? What kind of stock, do they have in the company? And then you want to talk about lawsuits. There were already talk about lawsuits from not Microsoft, but other investors who have put tons of money into the company. They're seeing value destruction here at this kind of what seems to be a spur-of-the-moment decision to oust the founder and just cause chaos down throughout the ranks. This is turning out to be a huge problem, and look, lawsuits will surely come, David.
On that point, Steve, thank you. Let's move to Deirdre Bosa with more on the broader impact and whether or not rivals could take advantage of some of this, Steve.
Yeah, obviously, this continues to send shockwaves across the VC and startup community here. Many are scrambling to figure out the impact on generative AI at large, even with Altman and Greg Brockman now. Microsoft is going to take time to build a team. So some questions here. Does this give Google and another generative AI darling, Anthropic, a leg up in this arms race? Meanwhile, every AI startup is frantically trying to hire ex-OpenAI employees, not just Microsoft. Now, at the crux of this weekend saga, though, is this idea of commercialization versus caution. OpenAI, we must remember, was founded as a nonprofit for the exact reason that they did not want a big tech company driven by profits to recklessly rush to develop generative AI first. They wanted to do it safely to, quote, benefit humanity as a whole and unconstrained by a need to generate financial return. Now, that may seem unrealistic or far too altruistic, especially to our audience, but the stakes are believed to be so high here, the negative or unseen consequences potentially so great that this unusual structure was needed. The OpenAI charter itself reads, we will always diligently act to minimize conflicts of interest among our employees and stakeholders that could compromise a broad benefit. And guys, we still don't know what caused OpenAI's board to oust Altman in the first place, that there's plenty of speculation
Let's
that it
pull
was
back. Nice, very nice.
that Altman began to
Good short,
commercialization
on NQ, Ryan.
Now, I just want to highlight Elon Musk. He is someone who has had his own history and agenda with Altman and the company itself, but I think it is worth bringing up this post from over the weekend. He wrote,
Marvelous pullback.
Co-founder and board member Ilya Stutzkever, who is thought to be behind Altman's ousting. Musk says that he has a good moral compass and does not seek power. He would not take such drastic action unless he felt it was absolutely necessary. But I know you guys are aware of this.
Yes, there you go.
This morning's letter
Good
signed
stuff.
by Ilya Stutzkever, and his post all the more confounding, guys. It may be that this is some kind of desperate bid to keep 500 employees from walking out the door. The whole industry here operates on
We need to
research
get under
and data scientists.
45, 30.
So I thought it was very telling that Microsoft CEO Satya Nadella's tweet ended with, we look forward to moving quickly to provide them with the resources needed for their success. By highlighting resources, I think he's talking to the whole industry, saying, come over here, we've got the compute power, we've got the cloud, we've got the GPUs to enable this technology.
Deirdre, the signing of the letter by him, a letter in which it says employees are saying basically you, the board, of which he was a part, and which conceivably he made some key decisions, are responsible for this. You should all resign. It's just, I don't even know how to react to it. It's bizarre.
Neither do I,
to
to be honest, and neither do a lot of people I speak to, except, again, it may be this idea that he's just trying to keep the business itself afloat because it operates on the people that they hire, and it had as recently an $86 billion valuation. How does it keep anywhere near that if they're losing 500 employees?
Well, that was
Let's see, man. Let's get it. That's what I'm talking about. That's what I'm talking about.
We can only guess what the number is.
About to say, I watched the movie Dumb Money, where It was about the meme GameStop and everybody diamond hands, bro, diamond hands.
Are going to have to take some bad marks potentially.
There are a number of Silicon Valley's most prestigious venture capital firms. Sequoia is one of them. They've already had a big sort of egg on their face earlier this year with FTX. Remember, they were backers of the other Sam Bankman-Fried. So this would be another mark against them, but also Andreessen Horowitz, Khosla Ventures. So, you know, they are the ones that are going to have to maybe come out and explain to their LPs.
Yeah, I participated a little bit in it.
What people knew and what they didn't. We know Reid Hoffman stepped down from the board earlier this year. Microsoft didn't have a seat.
It was wild. Some people made a ton of money. Other people got rocked. I didn't like when Robinhood like they didn't even touch on the fact that like Robinhood wasn't even allowing people to log into their accounts. Not only did they restrict buying, but they weren't even allowing people to get into their accounts, which was so messed up. And then they did like some system glitches, which made some people look like they had massive losses that they didn't really have. Like, it was wild.
Obviously, we'll continue to follow with your help. Thank you. As we head to a break,
I think there was like one person that actually like took his own life because it looked like he owed the broker like over 200 grand or something, which wasn't even true. It was all a glitch.
Century may be over, at least according to Rockefeller's Ruchir Sharma. He joins us fresh off his new article about China.
And new forecasts on spending as we start to think about
straight up manipulation and unfairness.
Not one you would expect. Big show still ahead. Minutes of 71. Back in a moment.
Yes. Come on. Give us that breakdown. You. What up? What up? Que lo que? Over here, short ES and short NAS. Trying to diamond hand this, man, to see if it takes out the London lows. Still might. Let's see. Still believe.
Welcome back to Squawk on the Street. Today marks 1 year since that improbable return of Bob Iger as Disney CEO. So you can see the stock's really done more or less nothing since then. Our next guest gives him a B. If you're going to give him a 1-year report card, Michael Morris, Guggenheim's media and entertainment analyst, joins us now. Has a buy rating in the stock, 115 price target. All right, why a B?
Thank you, David. I think like any good report card, there are some
okay, good. Yeah, at least if you can get out, break even.
out there. think there's some lower grades. I think there's some incompletes. And when we thought
No. It was one of the viewers is down.
struck by the vastness of the company, both the challenges and opportunities that Disney has ahead. So this first year has really been about Bob Iger fixing things is his message, and now putting the company in position to build and grow. And so we do think that he's done a good job. We assign that big value to some of the things he's
You back from DC or you still there?
to get the company prepared for the future. But those incompletes and those lower grades have to do with things like actually delivering against those objectives. And some of the things around where the company is focused. We like focus on the Disney branded things that we think the company can truly be excellent. And we're less enthusiastic about some of the general entertainment steps that are being taken. And we'd like to see some more progress there.
Yeah, what do you mean when you say, I mean, general
It's like
entertainment
I'm gonna
obviously
be
is
pulling an
problematic.
all-nighter
What are your expectations
this
in
week.
terms of steps, so to speak, when you say that?
Yeah, bro. There's like some beautiful ass moves during the London session. Like yesterday's open, like I was actually shopping when the market opened. Yo, missed a nice rebuy on oil at 75.50. And then me not getting up for the London session. Missed a nice little rally on ES and NQ. And oil is still going. Oil literally has bounced from 72 and change, like 72.30, all the way back to 77.77. Like right now it's at 77.77. Like shit, 5 points and change.
Give them a bit of a head start in competing for those viewers. And so when we look at that Hulu, ABC, Fox Studio side of the business, it is a fine business, but it's not the area where they could really break out from the pack using all that hard work that they've done over the last century.
There we go.
Michael,
Just
how
waiting
would you,
for
how would
ES
you assess
and
the
NQ
hand
to
that
do
Disney
its
holds
thing.
relative to the competition? Because it seems as if that, the views on this might have changed. Clearly, Netflix is kind of owns the new model in a sense. Those companies more dependent on the linear TV
There we
business,
go.
obviously,
Yes,
more
yes,
disadvantaged.
yes.
But
Go,
in this
baby.
world where every company's rethinking how much we're going to spend, how much we need to actually spend
Yo,
to
if
service
NAS
the
can break
direct-to-consumer
below the
business
London
and all the rest of it, it would
lows,
seem as if having the franchises and then having the
London,
flexibility
actually no,
to figure
the
out
Asian low.
exactly how much capital you're going to put
Yeah,
behind
if it
those
can break
things isn't so bad.
London low
No, it's
was
not so bad at all. There's complexity to the question, but I would point out
15,867. So a break below 15,867, and it's a rap city. We could see a movement back down to 15,800. Go, baby, go. Look at you, you dirty little. Bro, look at you. They so dirty, man. They are so dirty. Oh, look at them. Look at this. I feel like saying, well, what's that? Would you look at this? Would you look at that? All right, so you got out at break even. Now that you're out at break even, I'm pretty sure you're probably in multiple contracts. So now what you want to do is, honestly, I would say switch to the micros, right? Switch to the micros and scalp, because we could get a possible retracement again, but keep an eye for a break below 15,867. A break below that, and we could catch a nice 60-point movement to the downside. Nice.
Investors see improvement in the content slate and the power of the Disney brand driving
Come on, follow through. Follow through.
share appreciation.
Yeah, finally,
Okay,
when it comes to sort of
nice.
news we may expect in the nearer term, we've Iger's been talking about strategic partnerships for ESPN.
Okay, all right. So now you want to wait for a confirmation to reshort.
Is there a scenario under which you could imagine some sort of a partnership that would truly add value? I talked recently to John Malone, for example. He didn't really get it. He's like, I don't understand why they would do it. I'm curious to see your thoughts about it.
This is certainly an area where I agree with Mr. Malone. I have yet to see a clear definition or a clearly explained thesis on why selling a piece of the business or striking a deeper ownership partnership is something that would drive value for the company. If I take a step back, the concept of vertically integrating content and distribution has not really worked well over the years. Think about
companies going in different directions, with some distributors buying content, some distributors divesting content. But the bottom line is, for a business like a sports league, NBA, NFL, etc., or a sports packager, you want distribution as broad as possible. You want as many monetization points as possible and as many consumer touch points as possible. If you start moving forward in a path that aligns those businesses too closely through an ownership structure, you had better have a very good reason for how you're going to make up for the lost revenue by narrowing that breadth of distribution. I don't see it yet with respect to that type of acquisition or investment. We put that as a lower graded part of the report card so far. If they're going to do it, we'd rather they just do it and explain why they've done it than sort of talk about it in a speculative way.
Yeah. Well, all right. Appreciate you're going through all those different marks there. Thank you, Michael.
Thank you.
Still to come, the healthcare sector tracking for its worst year since 2008. Find out why and the key names to watch right here after the break. Don't go.
A little bounce for the London close. That means you need to be a little bit more disciplined. My choice on that every single day. Yeah, so that means you need to be more disciplined.
Black Friday.
Welcome back to Squawk on the Street. I'm Dominic Chu with this month's Sectonomics featuring the healthcare sector, the second biggest sector in the entire S&P 500, worth about 13% of the weighting in that index. Now, it has been an underperformer over the course of the past year-to-date period. A big gain for the S&P 500 overall, but meanwhile, the healthcare sector, as you can see there, has been at least trending lower, down about 5% on a year-to-date basis, and still below its 50 and 200-day moving averages, those trend lines that some traders like to look at. Now, as for which stocks have been the most extended above their long-term trading averages, check out the variety of names. It's not just biopharmaceuticals and healthcare. Eli Lilly, of course, is one of them, given all of the optimism around diabetes medications, up 28% above its 200-day moving average. Molina Healthcare up 20% above it. And then Cardinal Health on the medical and pharmaceutical supplies side of things, 20% above its 200-day moving average. Now, which ones are the ones that have been the worst, the laggards, below their 200-day moving averages?
Take a look at some of these names. Align, the parent company of Invisalign Dental Products, 35% below its long-term average. Moderna, vaccine maker, down 37% below its. And Illumina, gene sequencing, down 47% below its. So keep an eye on some of those relative leaders and laggards compared to their long-term averages, Carl. That's the healthcare sector. I'll send things back to you.
Tom, thanks very much. Dominic Chu. As we go to break, take a look at some of the biggest gainers on the S&P this morning. Boeing's going to benefit here from this upgrade that we got. Second upgrade in a couple of weeks. This one from Deutsche as they go to buy. Paramount follows. Palo Alto Networks. Sector-wise, energy's leading, and Infotech is number 2. Still ahead, why China's rise is reversing and what that means for your portfolio. Rockefeller International's Ruchir Sharma is going to join us to discuss in a moment. China is in the FT today, a big piece by Ruchir Sharma talking about the share of global GDP falling at the fastest rate since Mao was in power. Ruchir joins us this morning to talk about that piece, chairman of Rockefeller International. Ruchir, great to have you. Thanks for the time today.
Thank you.
You say it is a post-China world. You say their decline could reorder the world. You say that this recent appearance in San Francisco did hint at some moderation. What do you think's going on, and what are they doing about it?
Well, I don't think that they can do much about it. I think that's the real issue, which is that we want to blame Xi and all his policies, and those in part may be hurting China's growth rate. But I think that the issues are much bigger. Just look at their demographics, look at their debt profile, that this is not a country which is going to grow at a rapid pace anytime soon. They, in fact, should have already moved to a much lower growth plane, was it not for the property bubble that they were able to inflate for much of the last decade. And I think that now we're at a stage where they've hit a tipping point, and I suspect that China's share in the global GDP is going to gradually keep declining for the foreseeable future. So this, in a way, is a historic moment, which is that in the 1980s, China's share in the global GDP fell to a low of 2%. And then it rose like no country probably ever has to a high of over 18% by the start of this decade. And last couple of years, it's sliding back down. And I think that that is a huge shift that's taking place, pretty much like what maybe Japan experienced when its share of the global GDP slid from 16 to 5 or 6% now. I don't think it'll be that dramatic for China, but I think that this gradual slide back down has begun.
Yeah, the term Japanification has been used a few times, and we've talked a lot about, as you mentioned, the property debt and unemployment and the collapse in foreign direct investments. There was some discussion last week about why she didn't make a more overt attempt to woo businesses when he had those CEOs in front of him. What do you think that's about?
I don't think that in terms of there's only that much that like he can do, because I think that he realizes that this is more of a national issue. This is not about just sort of talking to CEOs and stuff like that. That he's made up in his mind that he needs to decouple from the US. I think that China is quite convinced that this is an era of deglobalization now, where a lot of the Western powers could cut China off. The supply chains, they can't do it in a dramatic way, but that's the path. So I don't think he wants to go back to embracing the way China was integrated in the global economy a decade ago. So I think that it's a very realistic stance that he's taking. And in that way, I think that he's being quite realistic, whether it's deglobalization or realizing the perils of too much debt. I think that there's a lot of realism which is behind China's policy here, even though at the surface it appears there's a lot of nationalism and bravado which is out there. But I think that we are in a post-China world now, and for me, it's equally interesting which are the countries that are gaining as China's share in the global GDP is declining. It's the US, and it's a handful of emerging markets which are gaining outside of China: India, Indonesia, Mexico, Poland. And that's a pretty impressive list, I think, which goes unnoticed in this discussion between US and China.
Ruchir, yeah, certainly the relative growers perhaps go unnoticed, but from an investor's point of view, there really almost has been a dismissal of China as a growth story for a while, right? I mean, investor money coming out of there, massive underperformance of Chinese equities, maybe because of the sense that capital's not going to be treated well there. But what is the main takeaway from your perspective for an investor in this shifting dynamic?
Well, I think that it's about the fact that you got to have some exposure to China, just because it's always going to remain a very large economy. So to cut China off is very difficult. But I think that it's all about moving to these other emerging markets outside of China. That's the really big trend for me. That's in place. So I think for investors, it pays to still remain a bit engaged with China, because, as you said, things have gotten so beaten down and sentiment is really negative. And even in Japan's case, like in the 90s, you got some pretty violent bear market rallies of up to 50-80% or so. So you got to be mindful of those rallies. But the broad trend is a diversification away from China to these other emerging markets. We've seen even Japan do well. I think that trend is pretty much now, that trend is on, and it's likely to run for the foreseeable future.
Do you think it's overstated, though? I mean, China is so integrated in
Stupid
supply
question.
chains
What
around the world.
is the
level
symbol?
of its manufacturing is far higher than many of those countries that you might mention.
Bruh, what is the symbol for USDJPY? USDJPY. Oh. Like, are you asking, oh, for the actual futures of it? Yeah, the futures representation of that is yeah, it's 6J. So
dramatic shift that's happening. But yes, because the cumulative investment into China has been so huge, and this is not an economy.
but this is you, like, you're trading. So when you trade 6J, you're trading just the Japanese yen. So as you see how you see USD JPY coming down, that means that the Japanese yen is strong. So you would be taking a long.
Yeah, it's happening. The incremental flows into China have completely dried up, but the stock is still relatively high.
Well, the music, yeah, a little bit faint.
Fascinating piece. Got a lot of pickup today, Ruchir. Thanks for the time. Appreciate it.
Always a pleasure. Thank you.
All right, time now for a news update.
What kept me holding it? Because I'm risking some of the daily profits, and I'm just looking to add. So literally, I could have added at 45, 42, which would have brought my cost average to 45, 34, and I could have closed it out completely and then re-enter, which is actually what I'm gonna do. So I'm gonna add at 45, 42, and then the next pullback, completely close out, and then look to scale back in. But that's if I get it.
Into the country in a convoy of
Okay,
ambulances. The World Health Organization says all of the babies are fighting serious
So
infections.
do you trade? I'll just trade USD JPY here and there. It doesn't move as quick as I like, so it's not something that I trade every single day. And the past few weeks, my main focus has strictly just been ES, Nasdaq, Dow. I mean, those are always my main focus, anyways.
Arrested in that case. Back over to you, Mike.
Rosa, thank you very much.
Alright,
Up next, the read on retail as we kick off the holiday shopping season, and one stock that you wouldn't expect to benefit that's setting up to be a winner. We'll be right back. Stay with us.
Everyone should market's messing with everyone's moving. So 6J is the symbol, right? 6J is the Japanese yen. So yeah, so if you want to trade yen, 6J is it. So if you look at 6J and you see that it's moving up, that means you would want to look to short USD JPY. But if USD JPY is moving up in price, then you would want to look to short 6J. One, adding at 42. Damn, don't want to give it to me. You're welcome. Let me wait till the London close.
Your triumphs.
Welcome back. Friday kicks off the holiday shopping season, as you know. Let's get to Courtney Reagan with more on the setup for that season. One name in particular that might benefit. We got a bunch of playbooks on holiday today, Court.
Yeah, that's right, Carl. And it was
Yeah, you can.
4 nights before Black Friday, and all through the house, things needed fixed. Home Depot might not be the first retailer you think of when it comes to the holiday season, but it's become a much more important time of year for the retailer. They're the largest seller of live Christmas trees in the country, and their home decor items, that seasonal collection that they offer, has grown 60% since they first started offering it. Black Friday, also one of the busiest online sales days of the year. Home Depot's third quarter results reflected what the company has called a year of moderation, with homeowners deferring larger projects. The holiday season does provide an opportunity to pick up some sales in decor and other categories to potentially make up some of those sales lost from the larger products. Now, new this year, Home Depot's gift center highlights $15, $60, and $100 items, for example, which could help price-sensitive shoppers. Battery power tools, that's a gift center focus. And the retailer said
We have a Fed or Yellen speaking today, so
and growing. And while many families may be looking for gifts this holiday season here at Home Depot, it's also an important time of year for people to replace or fix broken items around the house. Kitchen appliances, for example, select packages up to $2,300 off. Now, Home Depot shares grew 6.6% last November 1st to December 31st. So far this month, they're up 8%. That's in line with the XRT. And you mentioned, Carl, a number of notes out this morning.
what, Nas? Nah.
Holiday season. JP Morgan saying online sales, it looks potentially better than feared. And Goldman Sachs, BTIG, they surveyed consumers. It does seem like in both of those surveys, the majority of shoppers are looking to spend at least what they spent last year, if not more. Certainly still price sensitive, and the higher income consumers kind of driving the way. And if you didn't get that very fancy Christmas tree that was selling out all over TikTok at Home Depot, the Grand Duchess, don't worry, there's other options still available, Mike.
Courtney, thank you very much. They have plenty for you. Courtney, appreciate that. Retail, not the only sector hit by rising inflation, now moderating inflation. Grocers expect a more cost-conscious shopper heading into this holiday season. Grocery prices rose 0.3% in October on a monthly basis, up from September. Spartan Nash CEO Tony Sarsam joins us now with his pulse on inflation, the consumer, for the holiday season. Tony, so you guys, of course, a big distributor of groceries, operate supermarkets themselves. 2% or so annual food at home inflation. Walmart talking about deflation in some categories. How does it feel to you? How are consumers navigating it?
Right. So let me give you a little backdrop also. As you know, we operate or deliver grocery and wholesale service over 2,500 stores in the middle of the country. And about 80% of those operate as small businesses, and then the real heartbeat of those communities. So it's largely, it's a little bit of a rural skew versus others. And we are, of course, knee-deep
what is the
into one of our
technical
favorite seasons,
term
season. So we're
for a
keenly aware
candle
of
gap
things like inflation, how it's
where
going to
the
impact
first and
shoppers
third
overall. We have we've gathered up some information on shopper trends, what people are thinking about.
where the first and
There is
third
a
don't
real,
touch?
feeling of
Not sure.
nostalgia of the big family gathering. So we're trying to make that as easy and convenient for folks as possible. And so some of those trends we're seeing.
If there's a space, if there's a massive space between one candle where it closes and the second or third or even fourth, if they don't touch and there's a massive space in between, it's a gap. I don't know what fancy word the professionals would use. The wick don't touch.
But complicated. We want to make it as uncomplicated as possible as we look at that. So we're looking at things like how do we make stretch their dollars a little bit further.
Keep it simple. It's a gap. I'm not sure.
Things that we've done in that space. On your question about inflation overall, we worked really hard to keep prices in check, and particularly focused on those private label, our own brands, and making sure that we are very aggressive on the things that folks are looking for deals. We know that some families are still reeling from the inflation. Some families have lost government subsidized for food benefits recently, and that it has them hunting for those deals. I think that's one reason why there's another stat I'll share that folks are telling us they may wind up going to 3 or more stores to get their essentials, grocery stores to get their essentials. I think part of that's looking for convenience and items. We also think part of it's looking for good deals. So we want to make sure they have the opportunity to trade up to our private brands with great pricing.
And what about the inflation that you are experiencing or have experienced? You've seen some retailers caught in the squeeze here.
That's right. Yeah, it was a big ramp up last year in 2022. And during that year, we had obviously the extraordinary inflation. We put together what we call our merchandising transformation program, where we got back and wanted to make sure we had a really settled and productive way to think about pricing and challenge our suppliers to make sure that they weren't taking pricing.
10 minutes to 11.
That's played out very well, and we see that those prices have modified across the entire industry. And we're also seeing that folks are looking to drive volume, and so they're looking for more deals. And so we're working very closely with our suppliers to make sure there's great deals out there for those price-sensitive shoppers.
One of the things that came out of the Walmart call was the idea that if you do get some deflation in necessities, you get a little more relief in discretionary categories. I think that's too aspirational.
Well, it's a little aspirational, but we're certainly looking forward to that. We think there's a little bit of a balance that could occur in that space where there are folks who now are looking, as they stretch their dollars a little further on those core categories, they're looking for ways to actually provide more convenience, more indulgence on those items that might be a little bit more expensive.
All right, Tony, appreciate the time today. Thanks for stopping by.
Always a pleasure. Thank you.
Not done covering the holiday season here on CNBC, of course. Tune in next hour. CEO of Enterprise Rent-A-Car will join us. We'll get his read on the consumer, car prices, a lot more as we get into the new year. Of course, that begins in about 10 minutes at 11 a.m. Eastern time. Don't go away.
Welcome back to Squawk on the Street. U.S. trade restrictions continuing to make an impact on semiconductor companies such as NVIDIA. The Biden administration is trying to cap China's access to advanced AI chips. But that said, are these curbs too little, too late? Christina Partsinevelos joins us now to explain. Christina.
Well, the U.S. Economic and Security Review Commission seems to think so in their 700-page annual report they put out last week. It takes aim at Biden's export controls, arguing Chinese companies can still produce more advanced chips on old equipment, and yet the U.S. is still allowing those exports. We saw that in the latest quarterly reports. Over 40% of U.S. chip equipment makers like Lam, as well as KLA revenues, came from China. In other words, China is still aggressively buying U.S. chip equipment, even stockpiling. Other examples that question the effectiveness of the export controls: companies like NVIDIA are making workaround chips to keep selling to China despite expanded controls that were just expanded in October. Secondly, Reuters reporting the Chinese internet search engine Baidu is planning to buy AI chips from Huawei made in a Chinese foundry in a shift away from NVIDIA. That shows that homegrown options are improving in China despite U.S. sanctions.
If you let certain products, technology to go to China, I think there's an underestimation of how much China has the capabilities to improve on those technologies to basically leapfrog in the United States and achieve results, the exact results that the U.S. government was trying to prevent.
Well, the U.S. government aims to prevent the most advanced technology from entering China, affecting names like Intel, AMD, NVIDIA, who all promise limited near-term impact. But experts warn there is a more pressing impact to many of these chip names.
If the Chinese economy doesn't get better or improve, actually, that's probably going to be the biggest risk factor to U.S. semiconductors, as opposed to these restrictions, which are going to basically just delay China, not really shut them down.
China is nowhere near shutting down, but we are expecting to hear just that from NVIDIA's earnings that are out tomorrow after the bell, given the export controls are a major overhang for that name. Over 20% of data center revenues comes from China. Other concerns for the earnings report is supply constraints. We know that there's been some issues getting all of those.
We're getting close to the London close, so this buying could be for that.
Upside potential. Gaming is expected to bottom, and that's still considered a weakness for NVIDIA. And lastly, management will really have to instill confidence that we are not in an AI peak and that demand will continue into 2024. So, guys, if you're expecting any numbers, Boogie, you know, the whisper numbers that come from the buy side, that seems to play a little bit of a role. We're expecting total revenue $17 billion, Q3 data center revenue 13.5, and then the guide for Q4, that range $19 to $19.5 million. Again, these are the whisper numbers.
Yeah, Christina, you mentioned both wanting some clarity, the investors do, on supply constraints. At the same time, you want to make sure that there's still continued demand into next year, which gets at this idea of how much front loading of demand has there been, how much hoarding is there, and whether the company can really weigh in on that to kind of get ahead of any of those concerns.
Precisely, and so that makes the divide for the bulls and the bears for NVIDIA. The bears arguing that, you know, there's so much stockpiling. How are you going to see incremental revenue with all of these GPUs? Who's actually making money from adding these AI chips into their systems? And then the bull side that says, you know, with NVIDIA's next GPU that's coming out next year, that's going to be another driving force. All of the search engines that need these the generative AI for their search options will benefit. So it really depends on which side of the coin you are with this equation, but that's going to definitely come up in the conversation tomorrow.
Christina, thank you.
Thanks.
Christina Partsinovos. And with the NASDAQ, the best performer of the index is right now up some 0.63%. That'll do it for this hour of Squawk on the Street. Don't go anywhere. Another big hour coming your way right after this.
Now it's gonna take out these highs. Minutes to go. Full settlement of London will be at 11:30. So let's see. $11 o'clock. Slight little pop. Oof, still going.
It's Walk on the Street. I'm Carl Quintanilla, along with Junior Bosa in San Francisco. The heart of the stories dominating today's headlines ahead. Stocks moving higher following a big week of gains. Can this rally hold into year end with some key data and one more Fed meeting ahead? We'll talk to Citi's global chief economist, Nathan Sheets.
Plus, the 48 hours that rocked Silicon Valley and the AI world. We break down the implication of OpenAI's decision to oust CEO Sam Altman.
1 year in, after his return to Disney, has Bob Iger made progress in turning the ship around at that company?
First, let's take a look at the market. Stocks. They are moving higher on this shortened holiday week of trading. The S&P at the highest level since September, with tech among the best performing sectors. We've got some breaking news out of the New York Fed right now. Steve Leisman has that for us. Steve.
Hey, thanks very much. The New York Fed survey of consumer credit access finding that consumer credit applications overall declined sharply in 2023. The application rate was down 3.6 percentage points from last year. But kind of interesting the way it happened. Credit card applications were up for auto loans and credit cards, but they were down sharply for mortgage loans, hitting a new series low with a big decline in mortgage refinance applications. Now, the credit rejection rate, something watched very closely, rising 2.1 percentage points. It is now well above the 2019 level, and it is up big for home loans as well as for autos. In fact, we have the highest auto loan rejection rate we've seen in the series going back to 2013. The ability to come up with an emergency $2,000 if you needed it, hitting a new low at 65.8%. So, Carl, we've been watching the delinquencies. We get that on a monthly basis or quarterly basis. Now we're looking at the other side of this, the applications, and we can see the kind of stress that's out there with these higher interest rates out there and tighter credit standards from the banks and the stress it puts on consumers.
Steve, thank you. Gets us started here on this hour. Our next guest is fairly bearish on the U.S. economy going into the new year. Firmly on team recession, he writes, expects a downturn in the second and third quarters of next year. Joining us this morning, Citi's global chief economist, Nathan Sheets. Nathan, great to have you. You do say team recession. You say soft landing. We are not convinced. You're looking for 100 basis points of cuts. What's leading you to all of this?
Well, we remain on team recession, but increasingly we're sweating. Especially over the last week, we saw a fair amount of data that was more consistent with the soft landing narrative. Now, that said, we're holding on to our recession call, essentially because we believe that the laws of economic gravity that we have seen in previous cycles still apply to the U.S. economy, and specifically in the past, when wage growth and inflation have been as high as they have been and as they are now, part of the unwinding of that process has been a loosening of the labor market, a higher unemployment rate, and a recession. And we still think that tough slog of bringing down services inflation, and specifically non-shelter services inflation, is still ahead of us. And so we've kind of had the easy part of the disinflation